Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor podcast. On this episode of the show, Jake Claver, founder of Digital Ascension Group, a multi-family office focused on managing digital assets. Yeah, think crypto. He's with me for one of the most fascinating and intriguing conversations that I've had on this show for quite a while. Now, why is this conversation so intriguing? Because as Jake rightly points out, most of his clients are effectively digital lottery winners. And while I suspect many advisors, maybe you're one of them, might give a little pff to that kind of crypto bro striking it rich type of concept. Well, the truth is these folks aren't really any different than many other people who have had some sort of windfall and are now looking for sound financial advice. Now, why is this so important for you and your firm? Well, chances are you have clients who also own digital assets, and Jake is here to share how you can help them protect their wealth with institutional custody and earn your AUM fee for advising on those assets. See, I told you it's pretty intriguing. Anyways, now, before we get to the conversation with Jake, as always, please make sure you subscribe to the Modern Financial Advisor podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit me up. I'm basically at Mike Langford everywhere on the internet, or you can just shoot us an email, podcast@finservmarketing.com. Okay, let's get to the conversation with Jake Claver. Well, Jake Claver, welcome to the Modern Financial Advisor podcast. So wonderful to see you this morning.
Absolutely, brother. Thank you for having me.
Oh, my pleasure. My pleasure. You know, funny little backstory on this. Your team reached out and said, hey, listen, I think Jake would be fantastic for the show. Here's all of the reasons why. And I'm like, I don't know if he is going to be good for the show. I pushed back.
Yeah.
I'm like, I don't think this guy really is going to be talking to a financial advisory audience. And then Max, who's on your team, replied back, well, I think actually we have an RIA, and we actually do a lot of work with other RIAs and advisors to help them. So I kind of dug a little deeper. I'm like, maybe yes. So then we set up a prep call, and I'm glad we did. So I'm thrilled to have you here, buddy.
No, it's great. Excited to be here, and I think your audience is going to get some good information.
I agree. So, okay, this is going to be particularly fun because honestly, I expect maybe a large portion of our audience's heads to explode today, which is kind of
possible.
It's possible. I think they will, because we're going to be, talking about some things that I think many advisors have been banging their heads against the wall over for the last few years and so forth, particularly in the last year or so, as things in the crypto market have exploded. So why don't we do this? We'll push the detonate button by having you kick things off with an elevator pitch, a traditional elevator pitch for a Digital Ascension Group.
Yeah. So Digital Ascension Group is a multifamily office. We provide a full scope of professional services for family offices that have generated their wealth through digital assets, crypto, or have a significant allocation to crypto. Underneath the family office itself, we have an SEC registered RIA, where we provide institutional grade custody for all of our clients' digital assets. So we take them in kind. They invest them with us. We provide them an FBO account that's insured up to $100 million. They're in our institutional custodian that's our partner. And then we're able to do lots of things with that. So we have other partners that provide lines of credit against those assets. And then we also have sub funds that we put those assets to work in where they're not rehypothecated. And you're able to generate a yield or return's the right word because my compliance officer will get me, on these assets so you kind of get your cake and eat it too. You get the upside in the assets and you're able to generate some cash flow. And if you want to borrow against them, all good.
Yeah. It's really interesting. So I think you're being a little demure there when you're kind of like talking about a Digital Ascension Group, because when we first got on the call, our prep call, you mentioned that you're the fastest growing RIA in the country. And I'm like, immediately when somebody makes a big proclamation about how awesome they are, I'm like, my eyes roll a little bit. I'm like, okay, but then you followed it up with some data. So I wonder if you might just kind of give us a sense of like how fast things are growing, the scale of what you're doing and so forth, just so we can kind of level set it for people in the audience.
Yeah. So we formed the company 2 years ago, August of 23, but we didn't start accepting capital. We did a lot of things for compliance and developed a partnership. So we started accepting capital last year in September. We're currently at 150 million AUM, all in crypto, and we have about 450 million in the pipeline. Our average client has about $1 million in
Okay.
digital assets. We have 450 of those clients signed today that are onboarding with us.
That's wild. And I know I'm being a little hyperbolic here when I talk about like, blowing advisors' minds, but I just know from experience and talking with advisors, over the years, especially since crypto came on the scene, that there's just a lot of skepticism and
Mm-hmm.
pushback and so forth. So there's this I don't know, and then also, frankly, a little bit of FOMO might not be the right word, but a little bit of like jealousy when you see like when you've been down on something or skeptical. Let's call it that. When you're skeptical on something, and for some of the right reasons,
For sure.
and then that thing goes up like crazy and continues to go up, it's got to drive you nuts, right?
It's frustrating for sure. I'm sure for a lot of people, and I come from a traditional background. I went to school for
Yeah.
finance. I didn't enjoy the industry when I got into it at first. So I've had an internship at Northwestern Mutual, and they were like, "Hey, shill these insurance products to your friends and family, and we
Yeah.
make a bunch of money, and you really don't pay you much." And I was like, I don't think I like this,
Yeah.
So I didn't go the traditional, investment banking person path. I stepped away and did some industrial sales for a decade, cut my teeth doing that, scaled multiple locations for a Fortune 500 company, and then was acquired by another company, stepped away from there and did M&A. And during that period is when I made a bunch of money in crypto.
Yeah.
And so I started seeking out all these people that I needed personally, CPAs, accountants, a wealth manager, a tax accountant, or an attorney. And I called up a bunch of different firms over the US, close to 150 different firms. And I had spent a lot of my time learning about the space. And so I was able to vet those, and we whittled it down to the 20 people we work with now. And I could not find a wealth advisor or wealth manager that would take my assets in kind and manage them. There was L1 advisors. They have a, a platform that you tie your wallet to, and they pass you some trades and you still have to approve them, but it wasn't institutional custody. I couldn't add my wife to the account. I didn't have insurance. And so we decided that we were going to build it. And then that's what we've done.
It's a classic entrepreneurial journey, right? Where it was like, hey, I've got this problem. It's a real big problem for me. I want to solve it. You go on this journey to try to solve it. You can't find a solution. You're like, maybe other people have the same problem. Let's go go ahead and
Yeah.
do this thing. Let's solve it. Um, I love it. Absolutely love it. So going back a little bit, the reason why I teed up a conversation saying that we're probably going to make a lot of people's heads explode or go crazy at least is that we'll be talking about people that you termed in our prep calls. This is your words, not mine. Digital lottery winners, and I think
Yeah.
that's the way a lot of people. We hear the phrase, the term crypto bros, and I'm sure people don't like that, but it is what it is, right? People who like these are guys who everybody who's been in finance, who dedicated their lives to wealth management, helping people accumulate and grow wealth and so forth, or manage their wealth gets frustrated because like, hey, I've been doing all this type of stuff the slow and steady, a
Mm-hmm.
meticulous, careful way, and in come these guys. I'm not sure what the stats say on the demographics if it's majority men. Who knows? But
I'd say
these
70,
dudes
30
who
men
come
and
in
women.
and
Yeah.
they effectively buy, like you said, a digital lottery ticket purely on speculation, no fundamental knowledge really in place. And I'm sure some people really do have some fundamental beliefs and so forth. But you can see where it kind of pisses these guys off.
Oh, yeah.
So I think lowering the temperature a little bit and diving into like why it's important for advisors to have a plan in place to serve clients
Mhm.
who have either made their fortunes via crypto or some other digital asset class, or help those who may have at least a portion of their wealth there, or seeing like, hey, listen, there's real value here now for me. This is no longer some sort of weird edge case thing. So why is it important for advisors to take this space seriously?
Well, so we're going to get regulation. We have bipartisan, um, not approval, but um, they want to regulate crypto now that
Yeah.
Trump's in office. And the Democrats and the Republicans are both on board for that. So I think we're going to see stablecoin regulation here early in 2025. You just had the Bank of America CEO come out and say, hey, when this is passed, we're going to pass a stablecoin. It's
Yeah.
another form of cash, tokenized deposits, basically. So this is coming,
Yeah.
right? And it's going to become a more prominent piece of people's portfolios. If you listen to Kevin O'Leary, he talks about it being the 12th sector of the S&P 500. And there's companies themselves that develop solutions using these blockchain protocols and networks, but the tokens actually sit moving value within those ecosystems. And it's going to be a large learning curve for a lot of these RIAs that have been, I want to say, kind of handcuffed. Like the regulators have said, you are not allowed to touch this. There is no regulation on it. There's really not been a meaningful way for advisors to earn income or
Yeah.
provide products to their clients in this asset class. And so that's why we've curated something that we feel we can work with other advisors to bring to their clients, either by, if their clients are directly invested in crypto outside of their scope, we can provide that institutional custody, and there's some AUM share on that and upside. And then we can provide the other products, and we're kind of the crypto specialist. Or if you bring us cash, we have the hedge fund where we're running market neutral strategies where we get exposure to crypto for other RIAs they want exposure to the asset class and the upside, but they don't want to necessarily take the risk and the volatility.
What's interesting to me is there are two areas where I think it's really important for advisors to take this seriously. One is for a decade plus, we've been talking about the next generation of the heirs of your clients, right? You've got to connect with the younger folks and so forth. And so if you're the average age of an advisor is 60, so that means their average client's age is usually around a 5-year kind of circumference of around that. So their clients are typically Gen Xers and maybe early stage baby boomers, right?
Right.
Maybe not, and you can correct me if I'm wrong, the most aggressive adopters or investors in crypto assets, digital assets. However, millennials and younger definitely are interested and more aggressive in this space. So if you want to connect with that younger generation, right, that next generation who will be inheriting your primary client's assets, you're going to have to speak this language, if you will. And the other thing I think is we see it. Wealthy people, or people in general, but particularly wealthy people, hang out with other wealthy people, and they like to talk about what they're investing in, what's exciting,
100%.
right? So you could probably speak to this. Am I right on the demographic thing and why advisors should be kind of interested there? And do you have any insights on if that's true or not, or maybe we're missing something?
Our average client is probably 52.
Okay, all right, so older than I thought.
Older,
yeah.
So the Gen Xers, and we have a lot of baby boomers as well that are in their 70s that also have. I've found that people that maybe didn't prepare as well for retirement see this as their last hurrah or chance to get something that's an asymmetric bet that does set them up to be able to support themselves later on in life. And so some of these individuals have gone heavy on digital assets, but they've done the research. So they've looked at it the same way that you would look at stocks. Okay. And this is exactly how I look at crypto. I'm looking at partnerships. I'm looking at what use case or value they're bringing. Like, what is the problem that they're solving, and how much money is there to go around in that application. And there, like I said, there's companies behind these blockchains that are building these solutions that bring value onto the network, and that's what's going to cause the token to appreciate. So I look at it the same way. I'm looking for utility driven stuff, but unfortunately the whole market is speculative right now.
Yeah.
Just to set precedent. And I think all the other advisors would likely agree with this. It's completely speculative. The only thing that has really driven a lot of the adoption in the past 12 months has been the ETFs going live and people wanting to get exposure through the traditional IRA or 401k to digital assets through those means. We also set up IRAs in digital assets. We can invest in crypto directly inside of an IRA, self-directed, Roth, or traditional. So anyway, excited that I think advisors are going to have a lot more options in the near future.
Yeah, for sure. I agree. And it's that's, I don't even think that's up for debate, right? I mean, large, financial, anytime there's money to be made, this, by the way, I've said this before on other shows and on stage. Like, one of the things I love about our industry is if we can find a fraction of a penny to be made in the wealth management space,
do it.
We'll do it. Why? Because we just do that millions and millions of times. It becomes real money, right? So anytime there's money to be made, the wealth management and Wall Street will come roaring into a space. Like, there's lots of money to be made here. And whether it's, as you mentioned, purely speculative or not, like, so it's speculative on the way up. It's speculative on the way down. We don't care.
Well, right. Well, and if you're using the right algorithms and trading mechanism, you make money irrespective of market condition.
Right.
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 So we partner with a lot of sub advisors, is what we call them, inside of our hedge fund, that have run strategies for 4 and 5 years on the market and have proven track records with market neutral strategies. And some of those are in options, some of them are in perps, some of them are in futures.
Yeah.
There's a lot of different ways that you can skin that cat.
I'm laughing because the phrase "skin that cat." I actually literally saw like a couple of weeks ago. They go, "What is the origin of this phrase?" Like, no, what? Who's skinning cats? Right? It's just
Random.
it happens. Anyway, let's talk about a couple of things that you've mentioned already that I think are really important. One is, and this was a big aha for me when we were talking in our previous conversation, was the value of institutional custody. I think for many advisors, you're like, of course, like institutional custody is what we use for our business. We grew up on that. Like, help me understand why this is even a talking point for you. So,
Right.
so we have to acknowledge that many of the people in the audience may have limited to zero knowledge of this space. So talk to me about what's the importance of institutional custody. And if there wasn't institutional custody, like how are people holding on to their crypto stuff? Like, how is it working for them? So talk about that a little bit.
So there's really 3 options to hold your digital assets or your crypto at the current time. Most people purchase them through an exchange. So this could be Coinbase, crypto.com, Kraken, Robinhood, right? And people know that. I can go on here and I can buy this stuff. And that's kind of like a bank, right? So when you hold your money in the bank, you're a creditor of the bank. They owe it back to you, and you can take it at any time. But if everybody takes it at once, it's probably going to be a problem, which we've seen.
Yeah.
So same thing with these exchanges. There's some type of fractional reserve, most of the time that they're providing, and your assets are pooled together. They're commingled, and you can call them as you need them when you want them. But most of the time, people just leave them on there, so they don't have to worry about it. There's a portion of people in crypto that are not your keys, not your crypto. So that means, if you're not actually holding the assets somewhere off of an exchange, you don't actually own them. And that is true. So my correlation for that is like driving up to the ATM and taking cash out of the bank through the ATM and putting it in your wallet. And that's what they call these things that you're holding your assets in off of an exchange. They're hot or cold wallets. A hot wallet is something that's connected to the internet that you can trade on. So like Atomic Wallet or Exodus Wallet are a couple options there. So it's a little bit more secure. You own the assets, but you're trading them. And those have been hacked, and people have lost a lot of money. The more secure way to hold your assets would be in like a vault, right? So you've got your safe at the house, you put your cash in there. That's what a cold wallet is. It's air gapped from the internet. It's separated. The assets live on the blockchain. And on these chains, there are a wallet address where those assets sit, like a bank account. And when they're air gapped from the internet, there's no access to them, and they sit right there. And then, I can get as complicated as you want it to be, and it's difficult for most people to participate in this ecosystem right now because there's not institutional custody. It's very weird that you would have an asset class grow to $3 trillion with no institutional custodians regulated here in the US to be able to provide that for them. Abroad, there's other ones like Zodia, there's Komeinu, there's Hex Trust. There's other custodians globally that have like clear lanes. Archax is another one in the UK. But here domestic in the US, because there's no regs, we haven't had anybody except for a few. So you got Coinbase, which is who holds most of the ETFs, which is a centralized risk for that. And then you've got Gemini, and you've got Anchorage. And Anchorage is who we use as a partner. They have they're a federally chartered bank, and they set up the FBO accounts and structure everything for us to be able to provide that for our clients. So and if you're just holding on a cold wallet or on an exchange, like there's no insurance, there's no recourse. You are fully liable for the loss of those assets, which happens almost daily. If you click on a malicious link in an email and have your MetaMask open, game over. They're draining your wallet. If you give up the seed phrases. Like let's say you get a fake email from one of these wallets that says, hey, we need your seed phrases. We're going to reset your software or password or whatever. And you give them up, stolen. They take your stuff. There's no recourse, no way to get them back. And unfortunately, that's just been the case for the space. So there's a lot of people that have a large amount of assets that are sitting on a thumb drive in their desk or their safe somewhere. And when we started talking about institutional custody and the ability to have insurance on your assets, there's recourse, they're bankruptcy remote. You can add your spouse as a signer. You can set beneficiaries on the account. We've had a lot of interest in the ability to provide that for people. And then we've built these ancillary products around it.
Do you have, first of all, I can't imagine owning like a major asset class of any kind, like any significant portion of my wealth and keeping it on a thumb drive that could be lost or just, by the way, get corrupted. We've all, every single human being who's used thumb drives or any type of external drive or something has had this scenario where like something's gone wrong with it and you can't access the files anymore. At least I have many times. Yeah. What is your thought process, or maybe you know or don't know, but I'm curious if you do. The scale of each of the kind of these categories of the way people are holding their digital assets. Like, is it like 5% of I'll use Bitcoin because everybody knows Bitcoin. Is it like 5% of Bitcoin is on cold wallets, or is it closer to like 50%? Is there a way of you knowing like how these assets are currently custodied, if you will, held?
So because everything's on a blockchain, it's an immutable public ledger.
Yeah.
And most of the wallets that are associated with exchanges, they name them. These are our wallets, right? It's for public disclosure.
Yeah.
And so with that, I would guess somewhere between 70 and 80% of all the digital assets out there, if people are holding substantial amounts, or they're holding them on cold wallets.
Okay.
That is the most prevalent way to hold your assets at this time.
That is absolutely crazy. You think about a scenario like the LA fires, right? That just happened.
Gone.
Like how, and for those in the audience who are still kind of coming up to speed on this type of stuff, that is money gone. It is like having cash, as you said. Imagine if you had $1 million of actual American paper money, right? Sitting in a vault in your house, and your house burns to ash and everything's gone, and that wasn't a fireproof safe. All that cash is gone. Same exact thing. It can never be recovered, correct?
Well, so there is one way that you can do that.
Oh, interesting.
So you write down seed phrases. There's normally 16 to 24 words as your password. And so let's say you did lose your Ledger or your Trezor or your Decent or whatever wallet you're using. If you have those seed phrases, you can go get another one and type those back in, and it'll regenerate
because
your wallet.
It's a ledger. So that ledger is online. So technically you still own the assets. It's just, this is great. This is good information.
If you lose those keys, which many people have, there's a case where I think I don't remember what the total amount was, but some guy's got like close to $10 billion in Bitcoin on one of these, and he's got 2 chances left to guess the right password.
Oh my God.
Otherwise it deletes it.
I hate to tell you, dude, if this was, that was me, if I had that kind of, they would be tattooed on my body in places. I would be able to like, okay, if I ever forget, go in the mirror or something like that, pull the shirt
When
up.
he invested in it, he put like 10 grand in it back in 2010, right? So cool, it's 10 grand, whatever. But now that they're $100,000 a piece, or were, I mean, pretty significant.
It's pretty substantial money. That's amazing. So the reason why I wanted to go through all this, right, was because if you're an advisor and you have clients, and by the way, for financial advisors in the audience here, chances are a substantial portion of your clients,
1 in 5,
have some access, have some exposure to these digital assets, right? Either them, their wife, their children, grandkids, whatever. Like in those family units, money that you're managing and advising on, these assets exist. And to me, that would be a question I'd want to ask my clients.
Mm-hmm.
Do you have digital assets? How are they currently custodied? Like, where are they? Right. And then
most people have no clue that institutional custody even exists.
Yeah.
Like we're really the first consumer facing. The only other multifamily office in the US that offers this type of services people that are Bitcoin and ETH, centimillionaires.
Yeah.
We're the first people to ever take a retail client.
Yeah.
into our infrastructure. So
Yeah. Now, why are we kind of touched on this super duper briefly in the intro, but I wonder if we can
Mhm.
go into more detail about why are these digital lottery winners wanting to come and work with you and the Digital Ascension Group team? Like, they listen, because the common caricature of your crypto bro, right, if you will, is my Cybertruck buddy or the guy rolling up who used to work at McDonald's and is suddenly driving a Lambo, right?
Ferrari.
That
Yeah.
type of stuff. Like, this is what the common, I guess, image in the culture is of those guys. Uh, but why does I know you probably don't work with that. Maybe you do work with those guys, but maybe like,
So
what does somebody come to you and go, "Hey, here's what I'm looking to accomplish here. I've struck it rich as a digital lotto winner."
So we do a lot of proactive work.
Okay.
So that means we're working with people that have an allocation of somewhere between 500,000 and 5 million in
Okay.
digital assets, and they believe those assets are going to go 10, 20, 50, 100x in the near future. So we work with 9 family offices, we consult with them, but we've positioned ourselves in front of these people that are in the demographic that I mentioned before, 45 to 75 years old, that are looking for a traditional wealth manager that see the value in that, right? There's a lot of people that are native to Web3 that are down with the banks, and we're libertarian.
Yeah.
I don't necessarily get along with those people. Um, I think that this stuff is going to be used by the banks,
Yeah.
by institutions, by enterprises, and it provides a lot of value if
Yeah.
it's implemented. And you'll see a lot of appreciation on specific networks. So just candidly, we don't work with many people that own a bunch of Bitcoin
Okay.
or Ethereum. Most of our clients are holding assets that they believe will go up in value based on the actual use of the asset or utility of the asset by these banks and institutions and enterprises.
Can you describe like some of those assets just so to educate
Sure.
the audience?
Yeah. So top 10, there's plenty of them. So you got XRP, XLM, HBAR, Algorand, XDC is another one. These are most of what our clients hold, or their investments are in those assets
Okay.
versus Bitcoin and Ethereum.
Okay. Okay. Interesting. And I think it's important to for the audience to understand. It's like what are these things? I think again, I could be wrong, and maybe people will hit me in the comments and tell me that like, no, Mike, you're way off on what I believe. But I think for the average financial advisor, again, I think they're familiar with the concept of Bitcoin. They've heard Ethereum talked about. They've
Yep.
definitely heard blockchain at their financial advisor conferences and other things that they listen to, but they probably haven't gone super duper deep on it, in large part because of what you described. Number one, they can't make money. They haven't been able to make money from it, so they haven't been able to custody the assets and truly have uh, the ability to advise and have any type of discretionary authority on the accounts to trade on the client's behalf and so forth. So it's like, I guess I can look at it. You can tell me how much you have in this asset, and I can say, okay, now our financial planning looks like this. Here's what's in your 401k. Here's what's in your investment accounts and in stock bonds and mutual funds. Here's what your house is worth. Oh, and you have this other thing called crypto, digital assets. Great. Here's our financial plan going forward, right? But I think there's value, tremendous value, frankly. It's like if somebody's taking this seriously, yeah, we need to take it seriously as an industry, right?
And I think you'll be able to after
Yeah.
this year. I think we're going to get regulations that allow financial advisors to move in a meaningful way. We're first to market.
Yeah.
We've tried to set the standard for that, and again, want to provide an easy inroad for other advisors. If you don't want to have to learn the ins and outs of everything in the industry, and you want somebody strategic to partner with and rev share,
Yeah.
that's what we're doing.
So what if an advisor's, listening to or watching this episode, they're like, all right, this is really interesting. I need to know more about this type of stuff. How do they come up to speed to feel more knowledgeable? Because one of the things, no advisor wants to feel like they know less than their client about a thing, right? It is like, imagine if you walked into your financial advisor's office and they knew relatively little about stocks, right? You're like, all right,
Why am I paying
why
you
am
to
I
invest
here?
in
Like, are you
stocks
really
that,
going to
yeah.
advise me? And so this is a relatively new asset class. And it seems so funny because if Have you been heavily investing in these digital assets? You're looking like, "Well, it's not that new to me. I've been doing this for like 7, 8 years." It's like, yeah, but that's still new in the terms of the world. Yeah.
Right, for sure.
Like, these other asset classes have been around for hundreds of years, right? And the whole financial infrastructure is built around managing them. So what are some of the key opportunities for advisors to learn so they can be more knowledgeable? And then follow-up question would be, what are some questions they should start asking their clients along these lines?
So most of the, like, we're dealing with high net worth individuals most of the time. And they either want to get an allocation to the asset class. Like, as an example, I spoke with a gentleman earlier today. He's worth about 50 million. He wants to put a couple $100,000 in some of the digital assets that I talked about at the last conference. And so, we can provide that service, but that's a small portion of his portfolio. It's not, he's got a lot of real estate holdings. He's got some private equity. He has his own business and a lot of his estates outside of this asset class. But for most people, I think if you are ignorant to it, and not to be mean, but I think unless you're spending almost all because it changes every day, right? You're probably going to be. And I think I'm ignorant still on, there's many assets that I have no clue about. And I spend my whole day here every day.
Yeah.
So, somewhere between 1% and 5%, it's an asymmetric bet. If it goes to zero, it's not a huge impact on your client's life. But if it does go 10, 20, 100x, and let's say they put 1% in and it goes 100x, now they're literally twice as rich as they were before.
Yeah.
Right. Like, they have twice the amount of AUM that you get to bill on, and you look like the hero.
Yeah.
That doubled their net worth.
Right.
So there's significant upside in this. If you understand the asset class and you are partnering with people that do and can make good decisions on where to position you before liquidity moves in.
Yeah.
I think there's a huge opportunity.
Yeah. I 100% agree. It's like, and it can, by the way, that's kind of true on anything, right? If we're going to take some speculative bets, back in the day, people tell you when a lot of these digital assets, aka crypto, came on the scene, people talking about them as digital gold, right? It's like, it's speculative. It goes up, it goes down, whatever. So I heard that a lot. But one thing that I think is underappreciated as a value proposition for advisors taking this seriously is, we've been talking about for years, like, an engaged client is a good client, right? A client who's interested in what they're investing in, who wants to talk more about it, who likes opening up your email where there's all this stuff.
They're excited to talk to you.
Yeah, for sure. And I think anytime there's a new and exciting asset class on the market, new area to talk about, where, yes, there's lots of volatility, but lots of volatility means lots of opportunity, right? So I think this is tremendous for getting conversations going, right? And even if some of the conversations might be, a bah humbug from your client.
Well, that's okay. There's not going to be, so, it's 60 million Americans, like we talked about earlier, that are invested in this asset class.
Yeah.
So it's still very nascent, $3 trillion total market cap, stocks is $600 trillion. Like, this is a gnat, but it's going to grow exponentially because here's the kicker. All of these other financial products are going to be moved on chain. So this technology will swallow the rest of the asset classes. All that value moves into this ecosystem, and whichever tokens or networks are the winners are going to see exponential growth when that happens over the next 2-3 years here.
Yeah.
So,
that is an incredibly important point that I'm glad you brought up, and you kind of teed it up a little bit ago through a completely different angle, and maybe it was unintentionally. You talked about some of the libertarians who think, down with banks or whatever. And I always say, like, with any company in this industry, any startup, and I do a lot of work with fintech startups, and I always tell them, like, be careful when you say you're going to disrupt Wall Street. You want to know why? They literally have unlimited sources of capital. Like, they control the money. Like, they actually are basically, in many cases, self-regulated with the things that they do. They write the rules of the road. So if they can't outspend you and copy you and do what they want to do, they will write the rules so that you can stop you from doing what you do and make it easier for them to do what they do. Right? It's like they have unlimited money. And oh, by the way, at the end of the day, the ultimate digital currency is the US dollar. It's a digital, I could use it to pay for stuff, right? And you're going to want to translate your digital assets into US dollars at some point in time, because for the most part, you're like, if I want to buy a new car, they take
Yeah, they
dollars.
don't. Well, I think at some point they may take digital assets, and there
Sure.
are providers like BitPay and a
Yeah.
few other merchant services or payment
Right.
processors that do take but they're not passing that to the end user. They're getting dollars.
Yeah, that's
They
what I'm
want
saying. Like
dollars
at
on
some
the other
point in
side of
time,
that
it all gets
transaction.
translated to dollars,
Yeah.
right? Like, so there might be an interchange there, but and I don't say that to try to downplay the digital
No.
assets. I say it to say, like, as you mentioned, things are moving on to blockchain in part of this,
Well,
and
they're tokenizing treasuries. You've
right,
already seen that with Ondo, and BlackRock has partnered with Securitize.
yeah,
They're working on that, and that's just like the toe in the water. There's
yeah,
going to be a lot more financial products. The back end of the stock market is going to be tokenized,
yeah,
and that solves issues,
yeah,
right? So I'm sure you guys will be familiar with GameStop and
yep,
AMC and the debacle that was
yeah,
in 21, right? When there was a run on all these apps that people have downloaded that make it feel like they're trading real time, but in reality, it was still T+2 between
yeah,
the clearinghouses and the brokers.
yeah,
And so they front all this money and they actually oversold both the stocks by like 30% more than they should have. And they had to freeze trading and
yeah,
pull them back. If you had an immutable ledger that was across all of these brokers and clearinghouses,
yeah,
that doesn't happen. You can't sell more than you have, and it all settles real time.
yeah,
So both those frictions are removed. So that's, I think, in the next 12 to 24 months, you'll see stocks tokenized as
yeah.
well.
The other thing is, and I'm not sure how common this is with the advisors in the audience, but look, if you're where blockchain stuff will come into super duper handy is particularly in international
Oh
holdings,
yeah,
right? You know what I mean? Like, we don't have to worry about foreign currency exchanges and so forth, right? No, this is a global
mm-hmm.
ecosystem now, right? So it removes all the friction of having foreign governments involved, right? Of having foreign banks involved. Suddenly the money can just move, right?
Right.
In real time, right? With very limited financial friction on the movement of the assets. It changes things, right? For your clients.
Significantly. Yeah, there's a lot less fee, a lot less friction. I think you'll see things where the velocity of money will just pick up substantially,
Yeah,
which could drive inflation, right? So they're going to
sure.
have to reduce M2 money supply and probably keep interest rates where they're at in order
Yeah,
to mitigate some of the risk there. But anyway, yeah, I think it's going to revolutionize how money moves.
yeah. All right, so we get into some super nerdy stuff here. It might be over the heads of some of our. Listen, I'm a financial advisor. I'm not an economist. I don't want to.
Right.
I can just hear that right now. Like, just give me the gist. But that being said, we have economists on the show all the time. We like nerding out and that type of stuff. Two more things I want to cover before we get to the end of our time. One is advisors are hearing this and they're interested and their ears are peaked and they're like, all right, I do have to talk to my clients. I actually haven't brought this up. I'm convinced, Jake, Mike, I do have to go talk to my whole client roster about what's their current exposure to digital assets, where are they holding them, that type
Right.
of stuff. And we should probably start talking about advising on those types of things. But they don't have the current infrastructure in-house to do that.
Right.
How do they go about working with you in Digital Ascension Group so that they can, better serve their clients?
Yeah. So Digital Wealth Partners is the RIA.
Okay.
You can just go to our website. There's a contact us form there, and
Cool.
you can pick if you're a family office, another RIA, or whoever you are that wants to work with us.
Yep.
When that generates the form, it comes in the pipe, and then we will reach out to you and start the conversation. Should get a follow up email that's triggered based on which one you pick. And yeah, I would love to have a conversation with people if they think it's interesting, if they would like to move a portion of their clients' assets. Again, I don't think it'll be large amounts,
Yeah.
but maybe somewhere between 1% and 5% of the total portfolio. We can do it through SMAs and build stuff out that way. Depends on what TAMP you use
Sure.
and who your partners are, right? But yeah, we want good partners. We want good people to help build this out. It's very new,
Yeah.
still clunky in some ways. We're building the bridges. These things don't exist. We have a CTO and a tech team that work all the time on this. Yeah, happy to work with anybody if they just want to reach out through the website there.
Awesome. Yeah. Well, by the way, for anybody listening, we're going to have those links all linked up in the show notes. If you're watching the video, it's, the links are probably right below you. So there you go. Okay, last thing before I let you go. This is one of my favorite questions to ask anybody is crystal ball time, right? Let's get into it. So during our prep call, you had a few forward-looking thoughts that I thought we should probably share with the audience. You already teed on one of them, uh, the regulatory roadmap for crypto. You mentioned a couple of things happening. So what do you see in the future that's really going to make this a lot more mainstream and a lot more palatable for financial advisors to interact with these digital assets with their clients?
I think, well, can I get into my global
Please
macroeconomics?
do. Yes,
Okay. All right.
I am interested in it. Yeah.
So, I don't know, some of your audience may be familiar with the reverse carry trade in Japan. You're already starting to see that unwind. We've already got pressure on markets. You're seeing it in crypto, especially the last couple of days here. Looks as though the Bank of Japan has already started yield curve control in order to, move the needle back the other direction. Doesn't look like it's working. I think it's a kick the can, just like another
Yeah.
week type situation. Markets are at an all-time high here. So, I'm not a financial advisor. I just own the RIA in the
Yeah.
family office.
Yeah.
So I think there could be potential pandemonium that happens to markets if we do see a continuation of the reverse carry trade that started to unwind in August of last year.
Yeah.
All the signs are there for it to happen. So, big move down in markets. There's going to be a huge amount of US treasuries that are dumped onto the market when that happens. The way that the US saves the treasury market and the bond market, the debt market here, and the dollar is we pass stablecoin regulation. In that bill, there you have to use cash or cash equivalents to back the stable coins that you're issuing. So, Warren Buffett's sitting on $286 billion worth of treasuries. He's probably going to issue some stable coins, I would expect. Tether, who is the largest current stable coin across all of digital assets, made more money than BlackRock last year.
Oh, wow.
They have a $150 billion market cap, something like that. So they're one-to-one, or supposed to be. I don't really trust that. They've never been audited by a top 4 firm. They were audited by a top 13 term firm, but they do still have some Bitcoin on their balance sheet, and that's really the kicker for them is they will have to divest that, and they won't be able to because they're currently in a lawsuit with Celsius from the whole FTX and Celsius and Voyager stuff that happened in late 21 also. So they're going to be sanctioned, which is going to be a problem for all of crypto. Okay. You're going to see a big move down in crypto, Bitcoin, ETH, all of it. And when that happens, the ETFs, like we saw a bunch of volume yesterday on the ETFs, the most volume we've seen, I think $5 billion in the move down. I think that's going to continue.
Yeah.
I'm not a Bitcoin bull, which being a financial advisor in the crypto space, you would think I would be. But I think that there's potential significant downside for that asset. And I think you're going to see a total shift in dynamics where they're going to have to bring in regulation, but they're going to use Tether collapsing or being sanctioned as a way to really get rid of all the riffraff.
Interesting.
And I think on the other side of that, there's probably going to be somewhere between 50 and 90 networks and tokens that outlast that and are actually real valuable assets that are going to be used in some application and then they'll put a framework together on how to go to market with that and what's the security and what's not. But I think the way that they're going to really kind of clean the slate is through stablecoin regulation. And you'll have, a huge impact for the stock market, the ETFs for Bitcoin, which causes huge unrealized losses for the investment banks.
Yeah.
And we moved to T+1 last year on May 28th for the back end of the stock market for DTCC with the option to settle real time via digital asset. And so in 2022, R3 and the DTCC finalized their project. It's called Project Ion, that runs in tandem with the current stock market on the back end that is the tokenized stock market. There just needs to be an asset that appreciates enough to provide liquidity in that ecosystem. So that's the asset that most of our clients hold.
Pretty wild. This, it's really funny. Like it's almost like bringing things full circle. The way you close it, I love this. It really comes down to like we're about to institutionalize everything, and institutionalize is like not only the large firms, the JP Morgans and so forth, they're coming in, and the BlackRocks or whatever, just gonna be like, hey, look, we're gonna put this stuff on ledgers. We're gonna institutionalize it that way with stable coins. You mentioned Buffett, right?
Yeah,
an American institution in itself. Well, look, regulation, which the ultimate institution, the U.S. government is going to come in and put some rules of the road in place and make sure that they're adhered to, right? Like, so this is big stuff. And so it will probably in the short term, like you said, there's going to be some turbulence happening
For sure.
here.
Volatility.
Yeah, will be kind of crazy, but at the end, it will be a kind of a new normal, if you will, right? Like we're all gonna be subject to this stuff, whether you're really thinking about it or not. It's going to be part of your day.
What I correlate it to is like you send emails every day.
Yeah.
Do you worry about the network or the protocol that you use to send the email?
No.
You don't care. You just know you get your email and you respond to it and send it back, right? And you get hundreds of them a day, probably.
Yeah.
Think about how much mail was sent pre-email, like postal. You might have sent like 10, 15 letters a week, maybe. So the amount of transactions that are going to happen across the economy is also going to pick up substantially when they remove these frictions, just like postal to email. So that's kind of the correlation that I make for most people, so they understand that these are networks. Yeah. They're not a speculative. Well, they are a speculative asset right now, but they're on networks.
Fantastic. All right, this has been a fantastic conversation. So people are going to want to follow up with you. I'll send them to your websites. You're on LinkedIn, I know that. Where else can people like hang out, follow along with all the interesting insights that you and your team are sharing?
Yeah, so we are on all social media platforms. But if you want to go check out the YouTube channel, I'm live every Monday and Wednesday night, 9 p.m. Central. That's just Jake Claver is my YouTube channel. But I'm also on Twitter, Instagram, and TikTok, and I think I'm Beyond Broke. Beyond_broke on all those.
Yeah, fantastic. Well, this has been an awesome conversation. Thank you very much for coming on the show.
Absolutely, brother. Thank you for having me.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. I hope you enjoyed this conversation as much as I did. It's always fantastic to have you with us. Huge props to my man, Jake Claver, for coming on the show. I really thought this was kind of awesome, to be honest with you. I would color myself a bit of a crypto skeptic over the years, right? I mean, maybe you're in the same boat, but even if you're skeptical, sometimes you're like, darn it, that thing made a whole bunch of people a bunch of money. And while you can be a little like, gotta be kidding me, right? When you think about that, it doesn't mean those people don't deserve sound financial advice on those assets or need it. Frankly, they really do need it. So I hope you take what you learned today with this conversation with Jake and put it into practice. Okay. As I mentioned at the top of the show, please subscribe to the podcast on your favorite podcast platform and be nice to each other. We'll see you next time on the Financial Advisor Podcast. See ya. Bye.